So this is a quick look at the Marriott International or Marriott Bonvoy 2024 annual report, as it says on your screen. And I think the more times and more financial information you look at, even though we haven't explored all of the meaning, all of the formatting and everything yet, the more times you have an opportunity to look at the real thing, the better feel you get for what's communicated in these reports and these financial statements. And I think that will help us when it's time for us to actually produce these down the road in a couple of chapters here. Even in our homework for this chapter, we're going to do some preparing. So 2024 report starts out with a letter from the CEO, president, and chief executive officer, telling about what they've done. Lots of what we refer to in chapter 1 as non-financial information. A lot of description of what's happened over the last year or so. And then we get into the actual required disclosure. So we talked about those who sell stock. If they sell stock on the stock exchange, they're required to send this Form 10K, to the Securities and Exchange Commission. And we've looked at some others in our homework in the first couple of chapters, but again, the more times we have an opportunity to practice that, the better. Now, as you look at the table of contents, we're looking for the financial statements. So that is our subject for chapter 3, financial statements. So let's go down to page 31, skipping over a lot of this explanatory information, these lots of explanation of what has been happening at Marriott, till we get to the actual financial statements. We'll talk about this report that goes right in front of the financial statements in chapter 4. But here we are with the one that we are focused on first in this section of the chapter, and that is the income statement, or in this case, the consolidated statement of income. Couple of things to note. Consolidated, let's not let that get in our way. Consolidated just means that is all of the entities that Marriott controls, all added up into one. So when it says consolidated, that's talking about the business entity principle we learned about in chapter 2, that tells us what to include and what not to include. This is basically saying we're including all of the companies that Marriott controls around the world. And so that's why we call it consolidated. We're going to show you 3 years of information. They refer to it as fiscal years. I find that a little bit interesting. Fiscal years, even though they actually work on a calendar year, January to December. But they decided to use the term fiscal year. Usually if you do it January to December, you call it the calendar year. But let's just see what is included. As we learn, revenues are first on an income statement, and Marriott lists lots of types of revenues. Okay, reasons that they receive money specifically from their hotel owners, people that franchise, okay, their hotel chain names, their brands. And it totals all up to about 25, and this is in millions, so that's 25,000 million or $25 billion in revenue. So this is what they have earned. This is what services they provided and collected or expect to collect from their franchisees typically, or other so forth. Notice there's not hotel rentals, okay? Marriott does not get revenue directly from people staying in the hotels. They get it from those who operate the hotels, and they're using their name. Operating costs and revenues, this is the expenses. So they use the term costs and expenses. We want to be specific about expenses. These are the things that were used in order to earn revenue, right? That's the next part of the income statement. And then they have, as we went over, gains. Okay, gains or losses are usually separated. Marriott chose to put interest as a separate, okay, kind of down under other with the gains and losses, all right? And then finally, the income tax expense or provision for income taxes. And as this explained in our reading, we typically put income taxes last because it's kind of the nature of it is based on after all of our other expenses. And we have very little control over it because it's mostly determined by tax law. So that's an income statement again, noting the dates, noting there's 3 years. We can make comparisons. We can see that from 2023 to 2024, revenues increased. And they did the same thing in 2022 up to 2023. So we see 3 years of steady increases. We can look at income before taxes and see if it increased. We see it increased in 2023, but then went down. So you're starting to see the picture or the painting, if you will, from our description of what's happened at Marriott over the past 3 years using the income statement. But remember, as we will go on in this chapter to talk about, there are other financial statements, statement of comprehensive income we will not talk about in this class, but this balance sheet will be very important as we go into subsequent sections. And this is a balance sheet with assets and liabilities, the definition of which we've already covered in chapter 2. Okay, and equity. And then we have cash flows, which we will also discuss, and statement of equity, which really in the order that we typically do these is income statement, then the statement of equity, and then the balance sheet, then the cash flows. So that's not necessarily how they're listed in the report, but that's how we should, that's how we will learn them, and that's how we will work with them in that order, because you need the income statement before the statement of equity. You can do the statement of equity. You have to do the statement of equity before you can do the balance sheet, and so forth. So we'll see how that plays out as we move through chapter 3. All right, so there's a quick overview of another real-life financial statement that you could easily look up if you wanted to follow along with your own copy.